Remember just 2 weeks ago when the entire market was deep in the red? I put out a video sharing 10 stocks to buy the dip, and now, only 9 days later, every single one of them is in the green and some have even seen exceptional gains. TMC is up 44%, APLD is up 28%, and MRVL is up 17%. The market is moving fast and with massive catalysts, like the Federal Reserve officially ending quantitative tightening and potential rate cuts starting in December, with more expected next year. 2026 is shaping up to be a wild year for investors, and that's why right now might be one of the best moments to position yourself. Today we're breaking down 3 stocks I believe have serious potential heading into the next year. But remember, this video is for educational purposes only, it's not financial advice. Always do your own research and understand the risks before investing. With that being said, let's dive in. First up is Ondas Holdings, ticker symbol ONDS. Big shout out to MJA128 for recommending this stock. It's currently trading at $9, and given its insane revenue growth over the past few quarters, I believe this stock could deliver substantial gains. But here's where most people go wrong, because just knowing the stock isn't enough. In fact, 2 investors can buy the exact same shares and one can walk away with massive gains, but the other could end up with losses, wondering what went wrong. So how do you put yourself on the winning side of that equation? For me, it comes down to a simple 4-step plan, a structure that keeps emotions in check and helps you avoid the mistakes that wipe out most traders. Step 1 is to identify a high potential stock, something with a strong narrative and real catalysts. Based on my research, ONDS fits that criteria, which means we can move on to the next and often ignored step, defining an exit strategy. Because here's the painful truth, when a stock is going up 40-50%, it feels like it's just getting started and it's going to go up forever. So people hold and hold until it smashes into resistance and wipes out weeks or months of gains. That's why step 2 is all about knowing your exit points before you even enter the trade. Ideally, you want to map out profit-taking zones around key resistance levels. A tool I like to use for this is the Fibonacci extension, which helps to identify areas where momentum often slows or reverses. This is what it looks like, and the way it works is as the price starts climbing up, these levels of the Fibonacci tend to act as resistance for the price. Meaning we usually tend to see the price go up to one of these areas, pull back a little bit, go up to the next level, pull back, and so on. Knowing this, investors using this tool like to lock in some profits around these key areas, which enables them to secure some gains and also buy back at a discount if the price retraces. So based on this, what are some areas where we could see ONDS find some resistance in the future, and where you might want to consider taking some profits? The first price target is going to be around $13.62. The level above this is going to be around here, which is $15.97. And the third exit point is going to be up here, which is $22.75. There are some targets above these as well, and I'll talk more about those in future update videos as the price approaches these 3 targets. So locking in some profits around these levels could be an exit strategy you might want to consider. However, to put yourself in the strongest position possible, your entry timing has to be dialed in as well. That brings us to step 3, planning smart entry points. Most investors enter randomly, then panic buy every tiny dip until they run out of capital long before the real bottom arrives. Instead of guessing, you ideally want your entries at key support levels, places where buyers historically step in. To map these out, I like to use the Fibonacci retracement tool, which helps to identify areas where the price has a higher probability of bouncing. Here's what that looks like, and the way it works is as the price starts retracing, these levels of the Fibonacci generally tend to act as support for the price before the price bounces back up, and knowing this, investors using this tool like to either buy or dollar cost average down around these areas, which enables them to have an average entry price as close to the bottom of the retracement as possible. So based on this, what are some areas where you might want to consider either getting into ONDS or potentially adding more to your position? The first entry point is going to be around $7.49. The level below this is going to be around $6.20. And the third entry level is going to be down here, which is $4.90. So initially getting in at the higher level and averaging down at the lower levels if the retracement continues down to these could be an entry strategy you might want to consider. Now if you're thinking, okay, these entry points and the price targets make sense, but I don't have the time to constantly keep an eye on the price to catch it when it hits one of these key levels, then don't worry, because I've got a free solution for you. I've got this free service that you can sign up for, and I'll send you alerts as soon as the price hits one of our entry points and also our price targets completely for free. The link to join this is going to be in the description below, but don't worry about signing up now. Feel free to continue watching this video and I'll remind you about this at the end. Now that we've covered the first 3 steps, it's time for the most important one, step 4, diversification. No matter how much conviction you have in a single stock, the market can still surprise you and not always in your favor. Spreading your risk is what keeps your portfolio growing even when one idea underperforms, and that's exactly why I don't just stop at one pick. So let me show you the next opportunity on my list. Moving on to the second stock, which is TMC, the metals company. It's currently trading around $7.77, and I believe this stock could have strong upside potential as well. To get some price targets for it, we can use the Fibonacci extension tool again, which looks like this, and the first exit point is going to be around $11.35. The level above this is going to be around here, which is $15.68. And the third price target is going to be up here, which is $22.71. From where it currently is, if the price was to climb up to this target, we're looking at an upside of around 193%, which is very good, but we can see even better returns if we can secure some cheaper entries. So let's now take a look at the Fibonacci retracement for this to get some entry points. Here's what that looks like, and the first entry level is going to be around $6.49. The level below this is going to be around here, which is $5.34. And the third entry point is going to be down here, which is $3.70. So TMC was the second stock on our list, and you probably noticed that I'm using technical analysis to break these down. Some people trade based on the news, others focus on earnings, and then there are those like myself who stick to charts and indicators. There are lots of different ways to invest, but if you're wondering which strategy performs the best, the one that's given me the biggest edge is investing alongside key US politicians. Over the past few years, this approach has consistently outperformed everything else I've come across. When certain politicians make moves in the market, it often signals something bigger, and being able to track that has made a huge difference in my results. If you're curious about how it works, I put together this free video that walks you through the exact strategy I use. including real trade examples and the returns it's delivered over the last 3 years. The link to this video is in the description below. Feel free to check it out if you want to see how powerful this strategy can be. Coming back to the third stock on our list, which is Applied Digital Corporation, ticker symbol APLD, is currently trading around $31, and based on my research, it could also have impressive upside potential. To figure out how much potential, we can use the extension tool again, which looks like this for APLD, and some areas that you might want to consider using as price targets are going to be the following. The first exit point is around $40.67. The level above this is going to be up here, which is $52.75. So as the price starts climbing up, locking in some profits around these levels could be an exit strategy worth considering. But before we can exit, we'll need to enter, so let's now take a look at the Fibonacci retracement for this. This is what the retracement is looking like, and the first entry point you might want to consider is going to be around here, which is $26.13. The level below this is going to be around $21.80. And the third entry point is going to be down here, which is $17.40. I will be making update videos on these 3 companies as the price approaches our key levels. So if you'd like to stay up to date, consider subscribing to the channel. I'll also be bringing you the best investment opportunities multiple times a week, so that's another reason to subscribe. Also, if you found this video helpful, please consider dropping a like on the video as that helps out the channel a lot. And if you'd like to learn how to profit like a politician, the link to this free video explaining everything is in the description below. So feel free to check it out if you're interested. As promised, this is your reminder to sign up for the free alerts. The link to join this is also going to be in the description below. If you have any thoughts on these 3 companies or want to share some stocks that have been catching your attention recently, then feel free to leave those in the comments section below. It would be good to learn about those. And if you'd like to watch another video where I talk about more stocks to buy in December, then feel free to click on the video that's currently on your screen. Thank you very much for watching, and I will see you in the next one.